Most people who are doing their own taxes aren't making obvious mistakes. Instead, they're making assumptions that quietly cost them thousands every single year. I've reviewed thousands of tax returns over the last few years, and I see these common assumptions that people have about their taxes that are just plain wrong, that's causing them to either overpay or underpay tax. And of course, overpaying tax, no one wants to do. Underpaying tax could mean that you get the ATO on your back. So both of these aren't a good thing. What I'm going to do is walk through what these assumptions actually are and what the truth actually is, and how you can avoid making these assumptions and therefore optimizing your overall taxes. The first is, if I didn't get a receipt, I can't claim it. Now, a lot of people think, well, if I don't have a receipt, the claim is null and void. But this isn't always the case. So what actually happens? Well, there are definitely categories where you need a receipt to claim it in your tax return. But there are also categories where you don't need a receipt. So you need to understand what category does this particular expense fall into to understand, can you still claim it if you don't have a receipt? So 3 of the main areas where you don't need a receipt is small claims. So if it's less than $10 and the total is less than $200, you may still be able to claim it without a receipt. The next one is motor vehicle expenses if you're using the cents per kilometre method. So if you're using the cents per kilometre method, you don't need receipts for your fuel and for your retro and for the purchase of the car. Instead, you need to explain how you've come up with the number of work-related kilometres you've got. Now, there's a whole different topic, and I've talked about plenty of times on the channel about what actually constitutes a work-related kilometre. But you actually just need to be able to explain how you've come up with that number. So don't just say, I did 2,000 kilometres. Go, I did 2,000 kilometres because I did 4 trips that were 500 kilometres each. The third area is work from home. So if you track your work from home hours, you may be able to claim without keeping receipts. So you might not need to keep receipts for your phone, your internet, your electricity. So understanding that there are some categories where you don't need the receipts could mean that you're actually getting claims that you were actually going to previously disregard. So my rule of thumb in this area is keep your receipts anyway, because if you've got the receipts, we don't even have to have this conversation. But if you don't have a receipt, understand, does it fall into one of those categories where you could claim without a receipt? And what kind of evidence do you need to substantiate this claim so that if you get an audit done, the ATO tick it off? The next assumption is that working from home is an easy deduction. So what are the things that I hear? Well, I hear people go, if I work from home, I can just tell them how many hours I've worked. I'll just make that up and I'll get my claim and I'll use the shortcut method and it'll all be good. Well, this used to be easier. It's much harder now. So we do have a shortcut fixed rate method, which is great. So this is going to allow you to claim hours by a rate and get your dollar claim. So the rate is 70 cents. So we can go, we've got 100 hours. We're going to claim it at 70 cents and therefore we've got a claim of $70. So it sounds easy in theory, but you now need to keep a log of the exact hours you worked from home. So previously you could do a short period of time and then extrapolate that over the whole year. Instead, now you need to keep a log of the whole year. Now this is really easy if you get onto it from day one and you just simply at the end of each day that you've worked from home, write down the hours. If you're working the same hours every single week and you've got a timesheet, this is also going to help support it if you're always working from home. But it's very simple, just log those hours because then this is an easy claim and it's not one that you need to keep other receipts for. You just purely need the log of the hours and the rate and that's going to get you the claim. The other assumption people make in this area is then double dipping. So what I mean by this is you need to understand, what does this actually already include? So this claim is already going to include your phone, your internet, your electricity, your stationery. So you need to understand you can't also claim for this. Because if you do that, you're then double dipping, and then if the ATO audit you, they're going to straight away see work from home hours plus these claims and something isn't right, and they're going to look into things much further. So my rule of thumb in this area is track every hour that you work from home and understand what is included in that fixed rate so you don't double dip. Now I do have another rule of thumb, and it's one that everyone should follow, and it's to subscribe to my email list. It's free. I send you out a newsletter every single week, and it's 2 minutes tax tips. So it might be tackling a topic like this. It might be giving you some general finance tips. All it's aimed at is keeping more dollars in your pocket at the end of the day. The link to sign up is in the description of this video. But, of course, let's get back into these assumptions. The third one is more aimed at people that are using accountant, but it's, if my accountant didn't ask, it isn't important. So what do I hear? People go, well, my accountant never asked, so it mustn't be important, therefore I don't need to include it. And unfortunately, that is incorrect. Now, a good accountant should be asking you the right questions, but they aren't mind readers. They don't know about what they don't know. So for instance, they might ask you, did you have any other income? You say no, and you've never told them about that investment property you've got. Now, there's nothing on an ATO pre-fill that's going to say you purchased an investment property, and they've asked a question, how are they meant to know? Or what about that crypto that you traded? Now, the ATO do sometimes have a flag on their system that says someone traded crypto, so hopefully they would ask you in that situation. But what about if that didn't come up and they didn't ask the question? Well, it doesn't mean that you don't include it. And the reason why I say these things is because it is your tax return. You are the one that signs off to say that I have provided all the correct information. And if something goes wrong, it's probably not going to be the accountant held liable, it's going to be yourself. So this means you should disclose all of those side income sources. The ATO is getting better with their data matching all the time. They're going to find out, especially if it's going through a bank account, it is just easier to make sure you're disclosing it. Disclose all the expenses as well, because quite often when you're running these little side businesses, they're not very profitable in the early days, and therefore the tax implications may be very minor, but is much less stress than actually going through an audit and finding out you didn't include any of it in the first place. My rule of thumb in this area is if you aren't sure if it's relevant, mention it. If you're not sure if it's taxable or you're not sure if it's claimable, just mention it to your accountant. And of course, try and find a good accountant that is asking you lots of questions so you don't even have to ask yourself, well, my accountant didn't mention it, because they've already mentioned everything that could possibly exist in your situation. The next one is the ATO pre-fill is correct and it contains everything. And this is not correct at all. So what I hear people go is, well, it was on the ATO pre-fill and therefore that's all that I'm going to record in my return. Or it's on the ATO pre-fill, so therefore it must be correct. But unfortunately, this isn't always the case. There are certain areas that are very accurate. So your employment income is normally going to be very accurate. It's going to be reported every single week and then finalized at the end of the year. And you can be pretty confident that that's going to be correct, assuming you've waited for it to be tax ready. But there's other areas where you may get little information or delayed information or no information at all. So we could get delayed information. So this might be bank interest on a bank account, but maybe it takes a while before this gets to the ATO and you go and lodge your return before this is on the pre-fill, and then the ATO gets the information later. Straight away, you're going to get reviewed and audited and they're going to try and adjust for that. Or it could be something like a property sale. So you've sold a property, but the ATO is just going to know you've sold a property and they're going to flag that, but they don't know any more details. And you don't want to just go with that and include that property sale, because this could be your principal place of residence. So there might be CGT exempt, or maybe it's investment property, but of course you're going to have a cost to it. So there's more to it than just what's on the pre-fill. Or you could be missing information. Maybe you've got some shares and you've got your tax file number linked with one broker but not another. Therefore you get some of the dividends come through, but there's some other dividends over here that are missing, and therefore you've got an incomplete data set. Or you could end up with a horrible situation where what's on the pre-fill is actually incorrect. But now you need to go back to whoever put that on the pre-fill, whoever gave that information to the ATO, get them to adjust it so you can actually lodge your return without it being data match flagged. People sometimes treat the pre-fill like it's a complete data set, but really it's just a starting point. You use this as a starting point to go, sweet, these things are automatically filled, I've double checked them, they're correct, it means I don't have to do any work in those areas. Instead, I can focus my time on these areas where the ATO don't have the information. Especially around deductions, of course, where you want to maybe reduce that taxable income down. My rule of thumb in here is use the pre-fill as a starting point. Use it as a bit of a checklist as a starting point, but it is not everything. You need to make sure you are covering all your income sources, all your deductions, to get your final taxable income that is actually correct. If you're wanting to know more about what you need to get right and what you need to avoid getting wrong, in this upcoming video, I go through some of the tax mistakes that can cost you big time, and they can cost you thousands of dollars every single year. I thank you for watching this one, and I look forward to seeing you over there.